Good afternoon, everybody. This is Jeff Scott. It is approximately 3:30 p.m., so it's before futures are out. It is January 25, 2015, and welcome to this week's top-down review. Last week I said we were range-bound. This week I'm saying range-bound still, question mark. Um, It'll be sort of a tug of war between what clearly feels like some momentum of the market to perhaps go up to new highs versus the fact that the leftist party seems to be leading in Greece, which means potential issues as they are looking for concessions on bonds and potentially leaving the euro. So more euro calamities to come. But then again, the ECB acted pretty aggressively this week, which helped out the market. So a lot of headwinds, pro and con, coming from over the pond. Start with the presentation as always. This will probably be about an hour. Disclaimer, not for the presentation piece. The sessions for education purposes only. I'm a doctor, not a broker. I am truly independent. At some point in time, I paid for every tool that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I won't spend too much time here. I always say that, and I always end up saying the same thing, which is I really rely upon what I've learned from others. Now, I listened to Gil Morales' stock hunting webinar this weekend, and he actually uses the bongos. So I can actually say that Gil Morales uses an indicator that I was involved in the development. But that's it. Other than that, I learned from other people, whether it's O'Neill and the basics of canceling, Morales and Katcher adding pocket pivots, viable gap ups, Woodward and Brown really taking it to a new level and integrating it with HGSI. Elder and Lavorne, great books, great meetings. John Person, I've incorporated some of his things really aggressively into my daily trading. Things such as high close and low close dojis, his pocket pivot moving average, his trilogy setup. We'll be talking about some of those things at the upcoming seminar. The interaction of volume and price. This is Anna Cooling's book. It's cheap, less than $5 on Amazon for a Kindle. It's as good as anything out there and cheap. Van Tharp for position sizing. That will be a whole presentation or two that George and I do at our upcoming meeting. Why would I like point and figure charting? Because it's all about comparative relative strength. And that's Tom Dorsey. It's a great book. I mean, it was actually a very easy read. And although the charts are different, the underlying ideas and hypothesis are consistent with what I do. Here's the upcoming now. Here it's coming in April, according to Gil on his webinar this weekend. His short selling books. That means the market has to stay up until then. And here's my good buddy George Lee, whom I am aggressively working on finalizing the agenda for this coming meeting. I'm using a computer that is the same resolution as my movie, which is 1080p. So I don't bother killing my icons with my higher resolution computers. When I have to scale things back, I end up killing the icons so they don't move all over the place when I change the scaling. Because of the fact that sometimes my icons are being seen, I make it pretty clear that I don't use every program I bought. In fact, I use just a handful. TradeStation, Thinkorswim are how I trade. Genesis is a real-time platform that is by far the best charting platform, and I'll be using it a bit in my meeting in February. I'm just concerned since most people don't have it in our audience that I don't want to overdo it. They sell more copies than probably any other trading platform in the market. A lot of futures traders use it. For analysis, I'm a big believer of HGSI. We'll be talking a lot about the intraday feature at our upcoming meeting. EdgeRater adds to my analysis. I'm a seasonality fan. I hope some of you, in addition to the handful of folks that told me they did, took the Netflix trade. I got another one for you this week. And then George uses a lot of websites, so do I. Speaking of MarketSmith, if you are a subscriber, sometime this week they're going to post on marketsmith.com a 4.5-hour seminar that they put on this week on Saturday. It was outstanding and really drove home a lot of the basic concepts that we follow in HGSI type investing, which, as you all should know, is a sort of a next generation and I believe improvement on the basis of CAMSLIM. And they really stress the importance of relative strength of great stocks in comparison to the S&P 500. I put this up here for a couple of things. The simple thing is to always try and understand where we are. And we've been going almost to the point where we're just follow my pointer. Looks like we're selling off and we run up again. Looks like we're selling off and then we run up again. So it's kind of like we have cut the top half of this pattern off and we have very rapid up, down, up, down, up, downs. And I'll show you that in the S&P 500. Why is it important to know where you are? Because when I'm sitting here on the left, certainly, especially in the beginning, I'm buying stocks, I'm buying calls, I'm selling puts, I'm doing bullish strategies. When I'm on the sell side of the equation, I'm selling calls against existing positions, probably close to the money. I'm buying puts to protect profits. I might be buying puts on stocks I don't own to take advantage of a downside. I might be shorting stocks. I might be doing more bearish option trades. It might mean that I might be selling close to the money calls and protecting them with an out of the money call, putting the premium in my pocket. So there's a lot of different trades that I do based upon where I think we are in the cycle. The challenge with this market is we've been cycling up and down so fast. Market thoughts. Boy, was last week a great week for growth. It was fueled by the ECB and they're joining the quantitative easing party. I'm concerned about Greece. The leftists, last thing I saw said that they have a lead or they're going to win the election. But I note that that leftist party only has 37 or 38% of the populace vote. So that might limit some of how much they can do. The story is the same on strength. Dividend payers, whether it's REITs, utilities, MLPs. Biotech looks good. Airlines, truckers, India. What didn't look so good this week on my review were metals. Gold and silver, where the last couple of weeks they've shown up multiple times when I look through my top stocks. Didn't see a whole lot of them. I mean, I think we're left with a question of, are we going to break out to new highs, driven by the QE out of Europe, driven by better than expected earnings, driven by perhaps a bottoming of oil, and then the realization that our oil-driven entities are still going to benefit for the low cost of oil, or are we still in this trading range and we're just going to have a leg down soon? Until we prove otherwise, we're in a trading range. But boy, I'm looking forward to a breakout or a breakdown so I can make some real money in a trend. Other things that are working besides the dividend players, biotech continues to have some strength, and some of the low-cost oil winners would be airlines, truckers, and India. I mentioned India a few weeks ago, especially India banks. Take a look at what they've done. And then something, I talk seasonality about stocks all the time. And I think that you can use seasonality to find plays like Netflix. There are also strange quirks, like the years ending in 5 effect. If you go down and look at the Dow, for example, since 1990, and you buy when the monthly charts on the Dow surpass the January high, and you hold to the end of the year, you will make money in every year ending in a 5. One year, I think it was 2005, has whipsaws, but still ends positive. Every year ending in 5 has been a positive year since the year 1900. Now, the other thing that's interesting is the 7th year of a presidential cycle, which is what we're in right now, is also a positive year for the most part. So there's a lot of seasonality behind market strength this year. So, bragging time. Did you play Netflix? Shame on you if you don't. I'm just kidding. I mean, everybody's got to take their own gut check. Going into the trade, Netflix was in in a real downtrend. We talked about that. On Friday last week, and I mentioned on the webinar, it traded up on an earnings upgrade. And as I pointed out on the webinar, it was about to enter the most potent time of the year for Netflix strength. Earnings came out after hours on Tuesday, which, because Monday was a holiday, was the next trading day. And I think you all know what happened. Netflix had a major gap up, and as I said, I predicted a 20% move off of about 330, which would have taken it to 396, and it went way beyond that. It's currently up about 100 points from where it closed on on Friday, one day before the earnings. Now, I didn't play it perfectly. In fact, I took it cautiously. I thought that this 200-day moving average would be potential resistance. And so what I did is, I just showed you here, I went aggressive, saying that this is going up 10 out of 10 times, 9 out of 10, 10 out of 11, what the number was. I sold puts. Now, the benefit of selling puts is if you're right, it goes right in your pocket. If you're wrong, you get to buy the stock at a cheaper price. So I sold $330 puts that expired in 3 days after I did the trade, or excuse me, in 5 trading days after I did the trade on, I did my trade on the 16th, which was last Friday. So I sold puts for $14.47. Now, those who came to my meeting in June heard about my Walter Energy put disaster. So I typically then find a put that I can buy for $1, and that's typically way away from the put that I sold. And I usually buy them, and I buy them for 2 reasons. One, it caps my margin exposure, because you've got to have a lot of margin when you sell puts on a stock like Netflix. Because if the stock dropped to 300, those puts would be worth 35. I'm going to have the money in my account to back that up. So I actually bought, which was perhaps stupid in hindsight, some 265 puts for $1. My bet here was that even if the stock did not go flying, it was unlikely to fall to 330 minus the almost $15. It wasn't going to fall below 315. Why did I feel that way? Because I looked at this prior low and said, even if we go back to visit that low, I would not lose money on my puts. The good news about the puts is money in my pocket. The bad news on the puts, my gain was capped by that $14.47 minus the $1 on the protective put. I took that money, that $14 and said, what can I buy in a call for about that amount of money and take some benefit on the upside? I'm not actually spending any real money on this trade, or minimal real money. And when I looked around, I said, I could take, this was on the 16th, a 335 call, which was pretty much at the money on that day. And since I thought the stock was going to go up 50 to 60 points, I'll just sell a call at 385. Why would I do that? Because my at-the-money call cost me $23. That's an expensive call. I know a lot of people want to take the trade. And so I actually bought sold a deep out-of-the-money call. Now, that turned out to kill me on a mistake. I made $43,000 on my long put. I lost $2,000 on my short put. Excuse me, I made 43 on the put I sold. I lost 2,800 on the put I bought. I made 318,000 on my call at 335, and I lost 192. You net that out, I'll take that trade anytime, well over $100,000 gain, where I basically, as you can see, I made about $120 on the calls and $40,000 on the puts. So I would say it was a good trade. And, think about how much money I had to put out. I took the money from the puts and I used that as most of the money to buy the calls. Great trade, not trying to brag. I laid this trade out for you. I got calls from people who bought 350s, 360s, open-ended, and they're worth $70 a pop right now. People who bought 380 or 390 calls because they didn't want to spend a lot of money and they believed in it. If you bought a 380 call here, or this was a 385 call for, let's say, $6, that 385 call for $6 is worth over $50 today. So there's a lot of ways to make money on Netflix. How would you like to play this season? I forget that thing. It came off on my email. You notice I've hit the name. That means you got to stick around and listen. Here is a trade in a stock that's in an uptrend. So I like buying seasonality plays in an uptrend. It's mid-cycle, so I'm not buying it at an extended price. And I know that from January 12th to February 23rd, so it's already in that period, it goes up 10 out of 10 times with an average return of 19.7%. What else do I know about this trade? I know that based upon 5 years of seasonality, over the next 30 days, it's up 6.4% average and potentially 13.2% max. And I know that it has a 10-day, a 30-day average return rather on the 10-year seasonality of 16%, I'm sorry. So I have a stock that has lots of positive seasonality through February 23rd. I know out 30 days, I should expect somewhere between a 10 and a 15% return. And I'll take that because 10 times 12 is an annualized return of 120%. So this is one, and we'll talk about it in a little bit. Just to remind everybody, if you like the stuff that we do and you like what George does, you should come to our meeting. 3 spots remain. If you don't know George, he's much better than I am. And if you like what I do, there's a lot more of this to come. I'll also be at the PV meeting, but as an attendee. But February 7th to 9th, Best Western Hotel, hgsidoc@gmail.com. Email me quickly because spots are about to close. Week ahead, lots of news and lots of earnings. I think the big thing really is going to be how the investment community handles the trade related to the Greek win, the impact on the euro. Frankly, who cares if they leave the euro? Long term, the Greeks have been known to have deflate their currency on a regular basis. By deflating their currency, you make a dollar worth, $10 becomes $1. All of a sudden, you're paying back your bonds with cheap dollars, and that's how they've done it for years. So maybe they need to get out of the euro so they have monetary and financial policy under the same house. Lots of things to come out, some new home stuff, oil, gas, claims, Michigan sentiment may all be movers. But more importantly, and there's no way I can go through all these, there are a zillion earnings coming out this week. You need to know when your stocks have earnings. So let's continue. Let's take a look at the week that was. I don't know why that says 10/12. And you know why? Because I didn't change the name. Pretty certain that it's the one that I did this week. Yeah, it was modified. So I take a lot of analysis, and then I can archive them by putting them into an Excel spreadsheet. And then I can always go back by the week. So let's take a look at the market we had this week and get a sense of where we are. This is the first sheet says that on Friday the market closed, and using Friday market data, closed data, I put together a number of watch lists, many of which I use to find stocks to buy or sell. And then I like to look a week later and get an idea of which types of those watch lists were moving, and then more importantly, how do the growth stock indexes and the stocks that I chose as buy stocks, how do they compare to the S&P? First thing we go through real quick, and we see lots of black and little red. That means that the market was up for the week, or at least the types of groups that I looked at. If I look at the S&P 500, I see that the S&P 500 was up 1.6%. Hopefully you made good money this week. I did. I'm sure many of you did, even without the NFLX trade. If I look at the HGS 100, the IBD 50, they both outperformed substantially the S&P 500. So we know growth stocks did well. My buy watch, which I go through the 40 or 50 stocks very quickly at the end of my weekly presentation, I did pretty good. I was up 42 to 11. My average return was 4.67. Big return was on special situations. And to me, these are usually things that in the case of Netflix, it was up 29.68% because of the seasonality play. This was a dividend play, if I remember correctly. So market was strong, growth stocks were strong. One would not expect any recent Hindenburgs, and we saw no Hindis. We're getting up to where we sometimes get into trouble with new highs. New highs in the NYSE up to 9.29%. When I say get in trouble, is sometimes that's kind of where we peak in this range. We had 10% back here in October. That's a lot of stocks getting up to new highs. Now, you can't break out from lows, you break out from highs. So that might be indicative of a strong market, and maybe we'll see a melt up. But that's just something I'm going to put down in my notch of concern. The new lows are quite small at 1.14%. Another sign that, and these are from EdgeRater, by the way, which you probably can tell, of the hotness of this market is we've now gone to 90% of the stocks in the S&P 1500 are trading above their midline in the Bollinger Band. That's great. That's extremely bullish, and that's also a big number where we often see pullbacks or sideways movement from. You can see that about 12% of the stocks in the S&P 1500 are now, you know what, something screwed up there. Sometimes when I run it, look at that. My bad. I should have done this live so somebody could have said something. All right, that's what hot looks like. Let me just rerun it here very quickly. I've already updated the data, so it should only take a second. And let me fix my charts because I don't like to rely upon bad information. I don't like to tell you bad information. So I'll show you how easy it is to get this done. As soon as my EdgeRater runs up and loads, come on. So as I said, I've already done my data updates. It should say 122. Crap, no, I did not. All right, so let me just go to the S&P 1500, and let me just update this one. And you can see I'm building my snapshot down here. Now, normally I would update all of them at the same time. I thought I'd already done it. The problem is, if you saw my trading desk, you'd see I have many computers and just didn't pay that much attention to which one I updated. All right, we're updated now. Let's run the analysis. And of course, I hit the wrong one. Let me change this to the buckets report. There we go. And let me just sorry about that. It's a beautiful day down here in South Florida. We had a front come through last night, actually got into the 60s. We are hoping and expecting that we'll have great weather when we come down for our meeting. All right, we run the bucket report here. Yeah, that was a little hot what I showed you before. Here's where we are. This is not hot. This is 50-50. So that's a good thing that I checked that, and mostly because Had I not checked that, then I would have told you bad information. So this shows me that we're not hot, and that we still have about 6% above the upper band. We're clearly moving towards the right, but we're at 50-50, and that tells me that we have potential some upside. So if we go down here, this is where we were last week. You could see a lot of stocks trading below the lower band and 75% below the midline. And as we step through with some good days, but certainly not overheated. All right. Go back to my spreadsheet. Major markets using Ian's Woody indicator. You could see on Thursday we had kahunas across the board, and now we're starting to show some green. Green is good if you're long. Red is tough, and yellow, green, red going back and forth choppy is also a challenging market to trade in. We're still in that challenging market. We'll see if we can build upon where we're at. Where there has been a substantial change, so I'm just going to jump into my elder indicators and show you with the elder indicators how all the markets have come a long way. Last week we had mostly blue on the dailies, but a lot of red on the weeklies. This is the S&P 500. Ignore everything on these charts except for two things. One is the color of the price bars. According to the rules as I interpret them, a green bar on the index says it's okay to be long and it's okay to be neutral. A red bar says it's okay to be short or neutral, and a blue bar gives you wide open to take whichever trade direction you might want to trade. So as you can see, the S&P is green on the daily, blue on the weekly, blue on the monthlies. Clearly, you are okay to be long. And you could also see these little red dots, which are my MACD divergence windows indicators have actually gone away, which means we've worked off with this last pullback some of our MACD divergence. So I see a long opportunity on the S&P. Let's take a look at the NASDAQ. Green, green, blue, no more MACD divergences. Here is on the daily, here is on the weekly. I don't see this was a person's buy signal as well. This was our prior top, that's my target. If I look at the Dow, green and blue, no more MACD divergence concerns. I look at the Russell, green, blue, still has some MACD divergence. So this shows that the markets have improved considerably. Now I'm going to jump into HGSI. I'm going to go into Woodward & Brown user groups, major markets plus, and I'm going to go to the top-down view, which is all price and volume, heavily on the last day, some on 5 days, and a little bit less on 13 days worth. And I'm going to rank them and see that the strength of the market at the end of the week was in the dollar and treasuries, but that small caps were right up there. Big caps, S&P 500, the 100, the Dow were on the downside, so small stocks stronger than big stocks perhaps. If I look at 5-day return, silver had a great week, up 8%, and the VIX did not, down 25%. If I look at just 1-day performance, so the VIX and the treasuries, I think TLT, were trading up, and the stocks had moved down. So a lot of strength early in the week for stocks, not so much on Friday. Let's quickly look through some of these major indexes and get a sense of what the market is doing. All right, so this is the messy view, which I'll get out in just a second. You could see we had kahunas, which I mentioned already. This is the S&P 500. Let's go into a clean view. And we could see we had a bearish Harami on Friday, still closed above the 50. And as you know from being here before, we're in a major uptrend and we have not done anything to violate it here. And the issue is, are we just in a big trading range? Somewhere in here. And downside risk, perhaps the 200-day moving average, which is rising, and the upside, got to get through this top. So we're right in the upper middle, but middle of the trading range. The current move is up, and we're range bound in my mind until we break above or below that. If I look at the Dow Jones Industrial Average, I see a very similar pattern, and I'm not spending a whole lot of time on these because they haven't changed. NASDAQ, the strength, I said in small stocks, you could see the NASDAQ actually had a positive day on Friday, still a ways below its prior top. And then the Russell 2000 spinning top at the top of the prior bar, and here would be my target or resistance on the Russell. So everything's in a trading range with a bias, in my mind, to the upside. VIX moved up on Friday after moving down most of the week, and you could see not even a big up move on Friday. Now, the thing about the VIX to remember is this is historically low, going back years, but I think there was some element of recalculation, and this is the new norm for high, and this down here is the new norm for low, and we make money when the VIX is falling. If you're long, a rising VIX is not one that you want to be taking long positions. This VIX is falling, although we'll see what it does on Monday. The dollar not falling. This is kind of like a hanging man type of a pattern. The dollar has been incredibly strong and will probably get stronger because of the euro and weakness. And in fact, not only is the dollar strong, but you can really go back a long time to get an idea that we're now at the point where we're seeing, we're getting up to the May 2010 top of the dollar. Now, high dollar is great if you have money in the bank, I guess, because it makes it, if you're traveling to Europe, if you're buying things from other countries. Not so great if you have a lot of silver and gold, because in dollar terms they're going down. If you produce oil, silver or gold, strong dollar is not too good. If you are a European company, it's tough to sell stuff in the U.S. Actually, it's easier to sell stuff in the U.S. because we can buy more of your product. But if you're a multinational American company, you're going to sell less overseas because your stuff's going to be too expensive. So I think we need to keep an eye on the dollar. And no surprise, dollar strength, gold is weak. Now, it did get back above its support at 115. It's still above the 50 weekly moving average. Let's go back to a daily chart here. And you can see it had a pullback a little bit on Friday, but closed at the top of its range. I've thought the dollar's been in an up move, and I actually loaded up on some dollars, on some gold stocks rather. The gold's been an up move. And then silver had a decent week. Not quite as good as gold, as it's not above its 200-day moving average yet. So that takes care of the major markets. Next thing I usually look at are the industries. And you can see we have 176 in HGSI. I've got 67. I can't do it. Hold on a second. That are to the upside. I have 22 to the downside. So that is clearly a bullish. Now, what's not working? Because I'm not going to come back here today. Steel, metals, steel, oil, gas services, chemicals, packaging, rail, banks, integrated oil, specialty chemicals, home builders, coal. There's a lot of material stocks here not working right now. What is working, and we're going to concentrate on the first 10 groups very quickly, airlines, no surprise. How many of these do you own? I own a boatload of them until I get rid of them. The strongest one's probably Southwest Airlines. I'm going to go through these very quickly. Let me flip back to now my stock reading chart. And you could see great uptrend. Don't need to see that much on the chart, so let's tighten it up a little. Great uptrend. Kahuna's pocket pivots last week. This was on, I believe, United's earnings. And you could see a lot of strength in this group. Look at the earnings per share growth. Here's United Continental, gapped up on earnings. Great earnings coming in after next quarter. Here's American, so on and so forth. Here's Delta, new highs. Here's JetBlue. Here's Alaska. Right now, I hope you have some airlines. Oil goes up, they probably go down, and it probably matters how much they've hedged as to how much they're going to gain off of low-cost oil. But I can tell you, I fly all the time. The planes are full, and they're not coming down in their fares. Internet media was a second group. Google got some resistance probably here at this 200, but this is a big move. Frankly, it looked like a great shorting opportunity as it was going to bounce, as it has in the past, off the 50, but it actually took the 50. Probably good for the market if Google, Apple go on a positive run, especially if we want to break out of this trading range. That 200-day moving average will be overhead supply. Here's Pandora. You know, it's got to get through that 50. It did have a mobile breakout and a kahuna on Friday. Doesn't make much money. LinkedIn gapped up on Friday on a pocket pivot and a kahuna. So this is a whole sector that looks like they've turned around. Baidu broke through its 50 on Friday with a pocket pivot. Twitter, a little bit of a laggard. Will flip a PSAR reversal if it goes up at all on Monday. Trying to break through its 200-day moving average. And Facebook sort of going sideways, but right below its PSAR as well. So internet media looks interesting. Perhaps what we're seeing in Google is the beginning of something that makes a big difference. And we'll, but it's, you know, to the past, it's been shorting opportunities. Maybe there's a change. Speaking of shorting opportunities, this is Qihu, which has struggled, but Qihu's moving, and you could see that kahuna, pocket pivots, it's got to get below the 50. If it gets below the 50, Qihu perhaps can run to 80. It makes great earnings. So I did have somebody want to ask me how I manage my trades from a stop and position sizing. So I'm going to take a few minutes here and talk about my buy order on Qihu. So I'm going to open up my data window. So I'm going to write this down so I don't make mistakes. Qihu closed at $60.50. Its 50-day moving average is at 62.60. The PSAR dot is at 61.83. I would say that my risk will be about where that crosshairs are. And let's say that's about 54. What was the low on this day? 54.60. And so I'm going to put my low that I'm worried about is 54.60. So the problem I see already on this trade, I'm going to have a wide stop. Now the 8 and the 17. So I have a choice of stops on this trade. I could put one stop down here. I could also say I'm going to put my stop on that breakout above the 8 and the 17 day. So if I go back here and I look at the 17 was at 57.86, 57.93. So that could be my other stop, 57.90. All right. So let's say that I have a $100,000 portfolio and I'm willing to risk 2% on any trade. 2% would be $2,000. Now, if I put a buy point when it takes out the 50-day moving average. So 1 penny over the 50. So my buy point is going to be $62.61. My stop is probably going to be the 57.90. Now that's perhaps, that's a little bit over 8%. That's probably, or about 8%, as much of a room I want to give it. The difference between 57.90 and 62.61 is $4.71. If I can risk $2,000 on the trade, I can buy about 450 shares of stock. So if I bought 450 shares at a buy stop at about above the 50, and I put my stop where this first red bar is, then that's how I would manage that trade. Now let's say I want to put the stop lower. The stop lower is another $2.30. So now my stop is, I risk $7. Now I can only buy 300 shares. I look at every trade I take and position size and set my stops based upon that dollar risk. And I try and find natural places to put my stop based upon moving averages, pivots, prior bottoms, bases, etc. I want to point out we spend an entire hour every weekend looking at what stocks to buy. And I'm not sure I'll have an hour today because I think I got to take my dog out soon. When we probably should be spending more time on setting stops and how many shares to buy. And as one thing you learn from Van Tharp, he actually believes that it doesn't matter what stock you buy as much as it is how many shares you buy and where your stops and your targets are. Third group down, semiconductor devices, no surprise. Skyworks, we'll look at the first couple, had great earnings, and I like a bunch of these. Skyworks had a great buying opportunity as it actually traded down a little bit on Friday after earnings came out. Lower left, upper right, clearly a leader. As I said, earnings are out. A couple others that I like a lot in here. NXP, nice earnings per share, a little bit less extended. Had a mobile breakout from a squeeze on Friday. Probably in sympathy with Skyworks. Avigo Technologies, AVAGO, lower left, upper right. Earnings don't come out until February 24th. Isn't this nice how the earnings sit right on the chart like that? Texas Instruments, who would think? Pull back to support coming up off the 50. Everything is green like that. And then if you're looking for a less expensive new merchandise per se, here's Infi, which had a big move off of the 17 and 8 on Friday. Everything is green, great earnings per share growth. Sort of a younger play here, but probably a little bit more risky. Don't know anything about the stock or the company. Next one in my list, my good old biotech. And I just go through the top and I try and identify if any stocks are in good buy points. Array Biopharmaceuticals, small stock. They, I think because Novartis had to spin off one of their late stage products because Glaxo, whom they bought their oncology portfolio, had one on the market. They bought it, and you can see the big move. Now, interesting here, look at the kahunas that came in before the big jump. Do you think people actually knew what was going on? And then let's just look at this volume. 35 million shares on Friday, 3 million on Thursday, 2 million on Wednesday, 1 million, and then let's go back. You don't think that somebody knew on Thursday, long before the announcement was made and people started accumulating? Looking at volume intraday is a nice helper. It's probably too late for me to buy now. Gilead, I'm a Gilead bull. Great company. I care less about the pricing of their product because it doesn't matter in this world. And these are the guys that cured the first virus in hepatitis C and have done a great deal of work in helping HIV. Long-term uptrend, pull back to support here, has had a big move off that 50 weekly, broke above the 17-day weekly, also known as the 50-day daily this week. Back in an uptrend, earnings come out in the next 10 days, so I might wait for those. And it's all going to be about how has all the stuff going on with the various pharmacy benefit managers and concern about price, how they affected sales on their lead products. Puma Biotech, sort of not real attractive to me right now because it's in a bit of a downtrend. But ultimately, is it going to turn around and bounce? And is tomorrow that date? Well, this is another trade that you could look at, like setting your buy if it takes out the PSAR, set your stop tight perhaps at around that 17-day moving average. This has been a high flyer biotech, but like many of them, it doesn't make money. It's more of a story. Vitae, don't know this one at all, bounced in a pullback. I do have a big position in Achillion. We've been talking about this as another hepatitis C provider. Broke out some this week. Everything is green. All this move is on speculation of a takeover. And I think that's enough. Biotech. Back. Communications equipment. It's all about Apple. And not only is it all about Apple, Apple's earnings come out January 27th. Monday is January 26th. It's an interesting buy point, isn't it? PSAR just reversed, had a mobile breakout from a squeeze on Thursday. It makes money. Earnings are greater than its PE. It's had a gradual pullback. If I look at a weekly chart, you can see it's pulled back on the weekly. So a question could be, what are the seasonality of Apple right now? So the seasonality on Apple is it's kind of flat until March. Now it's got a 7 wins out of 10 between January 13th and February 24th. But the upside 8%, the downside 6.1%, not real attractive to me. Starting February 24th to April 6th, it's an 8 out of 10 with an 11.5% upside. And then April 17th to May 29th, it's 9 out of 10. So it's a little early on seasonality. Doesn't mean it can't go up. Seasonality is certainly not a negative. I think it's at an interesting point to look at for buying. In the essence of speed, I want to just take a look at some of these other leading stocks here, leading groups. Restaurants remain strong. Banks moved up, especially smaller banks. REITs are still strong, as we talked about before. Now, in the essence of time, let's just do a couple of quick things that I like to do. See if we can't find you some good stocks before I say goodbye, and then go back to that. Who you probably already figured out who the buy of the week is from a seasonality. Where was there big volume on Friday? Box was a new addition. Array we already looked at. Here's one I liked. Michael's Communication or Companies. I guess this must have been a company that was taken private and then came back public. I guess this was the post-IPO high back here, went sideways, pulled back, and this is the first close above the post-IPO high. Mobile breakup from squeeze, Bible gap up on Friday. Kahuna's makes money, good earnings per share growth. I like Michael's a lot. Why did it show up on this volume screen? Because it did 8 million versus the average volume of 745,000. Other volume movers, Radius Health. So it's a pharma company, pharma biotech, pulled back. Did have a pocket pivot on 2.9 million volume, which is 5 times normal. Don't know anything about them. Nevro is a recent. And then Infinera is a communications technology that had a big move on earnings. We go back to that seasonality play and then go through some of the stocks that I liked and then take my dog for a walk. This is Paraxel. And the reason why I like Paraxel is, Well, I like it anyways. They're a clinical research company. It's an outsourcing company that is used by many of the pharmaceutical companies. Instead of spending the money in building infrastructure, now they outsource a lot of the trial work. Paraxil, Quintiles, there's a number of companies, Icon. So let's just take a look at why I like the seasonality here. We're in an uptrend, channelingstocks.com here, in an uptrend in a channel. We're mid-channel, and we're sitting here in a 10 and 0 period of time with a 19.7% predicted move. And as I look out my 30 days, average 6.4%, max 13.2, looking at 5 years of seasonality, looking at 10-day average of 10%, max of 15, 16%, 30. So I'm looking for a 10 to 15% move. I can go into Thinkorswim just to get an idea of what play I might want to do on Paraxil. And the other thing is I've got to know when their earnings come out. So I've got, one of the things that I do is my buy which watch list. And let's find Paraxil. So here's Paraxil. Sorry about that. I went too far. All right, so here's Paraxil. Earnings come out after the close on Wednesday. So let's take a look at if I predict a 10% move, stock trades at 62, so I'm looking at a $6 move. Not a big move. Look at February options. So I might look at a couple of different things. I might say, I'm going to, let's see, if I believe the stock's going to move, perhaps an interesting trade, and I'm just thinking out loud from what my risk tolerance is, buy the stock, hold it, and try and capture as much of that 10 to 15% move. That's $10 on a $62 stock potentially. Or you look at the options, and they're not cheap. $65 call cost you probably $1.60, $1.50 to $1.60. The stock runs up 8 points to 70. Then you have $1.60 that option would be worth at $70. That option's worth $5. So you've done a 3 times return on your option. Let's say I'm very bullish. I'm not saying I am. I could consider selling puts. Maybe I would sell a $65 February put and buy a $60 February put. If I did that, I'm going to buy it at the ask and sell it at the bid. So I'm probably going to pick up $2 and, let me look at this again. I might pick up about $3 on that spread. All right. So I would make $3 a share, and perhaps I could take that $3 and buy some 65 longs. Now that's probably too aggressive for a lot of different people, but I have lots of plays I could take. Buy stock, buy calls, buy a bull call spread where you buy the 65 and you sell the 70 to reduce your premium cost. Or do a bear put spread where I sell the 60s and buy the 50s, and I make $1.35, and I'm protected down to $58. I put the money in my pocket. So there are a number of different things that you can do for a trade. I like Paraxil. It doesn't have the same oomph and dollar move that you might see in Netflix, but for $1.60, you can tie up 100 shares, and if the stock goes up $5 and you're now worth $4.85, you pick up $3 profit on your call. That's 300 on 100 risk. You buy 10 calls, it's potentially $3,000, and your out of pocket is $1,600. So I think there's a lot of potential opportunities. I liked Paraxel from a seasonality perspective. I did this last week. I'm going to do it again, and I'm going to finish by going through. I got 10 minutes before my dog's going to burst, and I'm going to go through my buy selections that I'm going to be watching this week very quickly and tell you why I like them. In no particular order. VIPS Holdings, I've been in this stock for a long time, in and out. Huge bull run. On the weekly, I've got sort of a cup now forming in the correction. This did have a 10-to-1 split. Broke above the 50 on a mobile breakout. It makes money in an uptrend. I'm willing to risk some on VIPS. Skyworks, we already talked about. Here's another technology play. Had a big move on Friday with a kahuna. This is MTSI. Makes money. Everything's green up top in the technicals. Don't know anything about the company. Like the chart. Do your own research. Horizon Pharma. I talked about it a ton as it was squeezing here right on the 50-day moving average. Had a PSAR breakout and a buy for me back here in early January. Continues in a big run. It's already had a big move. It's got great earnings per share growth, except for the fact it had a bad miss last summer. I'd be very excited about this stock. I have a position, still like it. Activist, big left to right, just acquired Allergan, big mover, still goes higher. Starbucks gapped up, Bible gap up on Friday. If you don't know how to trade Bible gap ups, go read Gil's book, The Yellow Book. He'll teach you how to make this trade. There are rules for this trade. Looks compelling. Gilead, I already mentioned it in its pullback because of the fights with the PBMs. Wait for earnings and guidance, but certainly looks bullish to me. MXLP, can't remember what they do. It's an MLP, which means it must pay about it pays a 1.8% dividend. Looked like it was breaking out. We already looked at airlines, United Continentals. The refiners looked interesting. This is Phillips. I had a triangle, or a wedge rather, that it broke about, retested, is broken out again. All right, Boone, just a couple seconds, honey. That's my dog. With the kahuna, everything green. I liked Phillips. Valiant, another pharma in a big move up. It's funny, Allergan went to Activist. They left Valiant at the altar, and both the winner and the loser have gone up since that was announced. Here's Southwest, another strong airline. All the farmers markets looked interesting. They've all had a nice move. Sprouts had the best combination, I thought, of earnings. It still grows at half its multiple, which is worrisome. Nice up move. Everything's green, coming out some recent pocket pivots. Avigo we looked at. Acorn is another pharma play. Lower left, upper right. PSAR reversed with a MOBO. Great earnings per share growth. Infi we already looked at, that technology play breaking out. Mallinckrodt, love this, lower left, upper right. Think of Questcor, they're the ones that acquired it. Great growth rate compared to its multiple. Breaking out to new highs, everything is green. FireEye is in the technology and in the, I think this in the antivirus malware world. And it's been a dead stock, but you know, it's been basing for a long time. It broke above the 200 on a mobile breakout from a squeeze. It has makes money, or excuse me, does not make money, might be worth a nibble. Tesoro's another refiner. YY, think VIPS, think all these other Chinese retailers, internet retailers trying to get above the 200, weaker of the bunch, but great earnings per share growth. Lannette's another biotech. It's one of my favorites. I buy it off the 50 and 200. I sell it when it gets extended. It's time to buy it again. NXP we looked at already. AmerisourceBergen, McKesson, and Cardinal are all big winners in the battle of Obamacare, as they all win by the more product that's sold, drug distribution, and they're all on my list. Baidu in the same category as Google, getting back up through its 50-day moving average with some pocket pivots. I like that. Taser, It doesn't make sense to me from a fundamentals, from a dollars and cents, except their little video cameras that are going to be worn by all the cops make it a growth story all over again. So I like Taser, love the chart, lower left, upper right, clearly a leader. Hawaiian Holdings is another high growth on earnings. Airlines have a position already in that. Tower Semiconductors, sort of a cup, maybe a little handle and taking off here. Everything's green, came out of a mobile breakout from a squeeze. Quihu we looked at as potential bounce play. Simo is another technology play trying to break out here. Blackstone Group is another one of my holdings. I hold this for a number of reasons. One of it is it pays a 4.9% dividend. Asset management, investment advice company. Sunoco LP, oil, it's pulled back to support, coming off support, multiple pocket pivots, everything turned green. And oh yeah, they pay a dividend of 4.2%. IDTI, another technology play, been watching this, had pulled back to the 50. Palo Alto pulled back to the 50 on a mobile breakout from a squeeze, had a belt hold, bullish engulfing pattern with a pocket pivot and kahuna. Technically, it looks interesting at this point. Delta, another airline, which I like. Burlington, what a lower left, upper right retail story. Earnings are already out. Great earnings per growth expectations. I like Burlington stores. I won't shop there, but I like their stock. I don't need any jackets. I live in Florida. Lower left, upper right, Celgene, not always the tightest stock. Certainly a leader of biotech right now. Everything is green. Good earnings per share growth coming in. JetBlue, another airline breaking out. Mentioned Texas. I don't know if I mentioned this. Another technology stock, old name, Texas Instrument. But look what happened. Mobile breakout from the squeeze. Kahuna pocket pivot. Everything's turning green. Makes money. Growth rate much higher than PE. Stocks usually go up in that setting. Here's Paraxel. Pull back to the 50. Looks like it's. Let's go to a weekly. Lower left, upper right on the weekly. Coming out of a recent correction. Makes money. As I said, it's a seasonality play. Here's the group strength. Cal Education, I don't usually trade these stocks. I love this pattern. Ran up, essentially pulled back in a slow sideways decline, broke above its 50 on Friday. Kahuna, pocket pivot, makes money. XRS might be a play for this week. InvestNet, sort of a cup going in here, something I just wanted to watch. Everything was green. The truckers looked interesting. They've been squeezing. Here's Heartland Express, makes money, coming out of a mobile breakout with the squeeze. Insys Therapies, this broke out of a wedge formation. I think I put here, I did put there, let's see if I can get it to show up at all. There it is. $1.67 in 2015, 48% growth. I thought this had a chance when it broke above the wedge to create some dollar value for me, and it's working. Knight Transportation, another trucker, pulled back to the 50. Might be a good place to be buying it. Don't know anything about ASSX. Like Insys, it broke out of a wedge, breaking out to new highs. Apple, we mentioned. El Polo Loco, I don't usually like to buy stocks that are not out to new highs, but here's a stock that pulled back, just in an uptrend, broke out above the 50. Why do I like it? Because, my goodness, I buy it at $26.50. I could put my stop at 24, which is still $2. Maybe push it up here at the lower that day and let it run. I think it's was an interesting story earlier. Restaurants are working, and it's clearly trying to reestablish an uptrend. Zynga, bottom fishing, $2 stock. Don't pay much attention to it, except it had a PSI reversal and a kahuna and a mobile breakout from a squeeze. Cheap stock. Looks like it might be waking up. Again, it's a cheap stock. Under Armour, sideways move for a long time. Pocket pivots and kahunas starting to turn green. Makes money. Earnings are February 4th. Don't know anything about Jumai, but it kind of reminded me of Zynga. Basing here, couple of kahunas, breakout. Looks like it might want to move, but I wouldn't touch this until it got above its 50. Han Industries, basing, 50-day caught up. makes money above its PE. McKesson is like Amerisource and Cardinal. Here's a bottom play on an energy. Don't know anything about Bonanza Creek except it had a bunch of pocket pivots. Mobile breakout from a squeeze. On balance volume is heading up despite the stock sort of going sideways. I find that interesting. And this was a REIT of oil infrastructure plays that's pulled back hard, had a kahuna. OBV has turned up, and it pays a 7.7% dividend yield. Tied to the energy, which makes it more dangerous. JDS Uniphase, an old name, certainly not new merchandise, really going sideways. Why did I pick this? That's a good question. It fired on my John Person indicators, had a PSAR reversal in a kahuna, recent pocket pivot, mobile breakout from a squeeze, everything is green and earnings are coming in. So Camco is a pharmaceutical company, nice pattern, little bit of a bull flag here, breaks above this point. It might be something interesting. Unlike a lot of the small biotechs and pharmas, this one makes money. I'd be looking for it to break above that pennant. Kimco Realty, just another REIT that looked interesting. Great earnings per share growth to support paying a 3.4% dividend. So that was a lot of stocks, but that's what I do. I go through a huge number of stocks. This week I looked at, my dog is giving me that look, so I'm about to say goodbye. This week I looked at 583 charts. I look for stocks in uptrends that pull back to support, that have momentum coming in, and I like stocks who have earnings per share growth greater than their multiple because that gives them room to run. And I hope you got something out of this, and have a great week. Watch out for what happens with the euro. We'll see if Paraxel makes a play, and I hope you took the NFLX score and come see us in February. Bye, everybody.